Welcome to another Lumi Financial Corner. With us once again, Michael Zaremski, head of U.S. Private Banking, Bank Lumi USA, member of the Investment Committee for Lumi Investment Services. Michael, good to speak with you. How's it going?
Great to speak with you, Zev, and thanks for having me. Everything's going well.
So how are we doing from an economic point of view? Were people taking the vaccine? The economy seems to be opening up. How are we really doing?
Zev, I think we're really starting to get to a point where we can start talking about getting back to normal. And I think we can talk about normal in a few different ways. And, I think one of the ways that I look at it when we look at the markets is just looking at a simple index, which is the volatility index. So many times people talk about the VIX, which is the VIX index. And when we look at it right now, we see the VIX has crossed down below 20. The VIX is now at its lowest level that it's been at since the beginning of the pandemic. And to me, I think that this is starting to show signs of healing in the economy as everything starts to kind of go back to kind of a much more normal situation. Just like to say that, again, the views being expressed here are mine, not necessarily those of the bank or the broker-dealer. But when we do continue to talk about what normal means, normal might mean something a little bit different going forward than it did prior. But we're seeing more and more signs of healing. We're seeing more and more signs of recovery. And I think that everything that we've talked about over the last few months together really comes back to what I would call the three pillars or the three horsemen of recovery. And right now we're looking at a central bank that remains incredibly accommodative. We're looking at fiscal policy that should be somewhat stimulative. And as you highlighted and as we talked about, we're looking at the pandemic abating a bit. We're looking at vaccines moving forward, despite some of the recent news on J&J. I think we've had some numbers in the last couple of weeks where we've had 3.5 million or over 3 million people vaccinated in a day. And we're getting closer and closer to things like herd immunity or, herd immunity amongst those that are, most potentially impacted by COVID. So everything's not perfect. Everything still has a ways to go, but I think we continue to be moving down that pipeway of getting back to normal.
Because the media doesn't seem to be playing up the fact that the economy is moving back to normal. They seem to be hyping on other stories. But I guess if you really analyze it, you see it's more like what you're saying.
Absolutely. And if you look at some of the recent data that's coming out right now, particularly GDP is another great indicator of normal. When you look at the GDP for Q1, when those results come out, we're going to be most likely above or beyond where we were at any other point in time in history. So again, we've seen recovery. We've seen the V-shaped recovery. We continue to see healing across, unemployment data. And interestingly enough, right now, there is somewhere in the magnitude of about $3 trillion of household savings on consumer balance sheets. And, my expectation would be that there's a lot of pent-up demand. People have been spending on the things that they can spend on. But as soon as the world opens up, you're going to see more and more people flying places, staying in hotels, going out to restaurants. And I think the last leg of economic recovery, the part that's been most impacted by the shutdowns and the lockdowns, has been the, hospitality ends of the market. And as we open up more and more, we're going to see that, explode out. There was just a news story that I saw across the wire earlier today or yesterday where the governor of Nevada said that June 1st is going to be 100% opening for the state of Nevada. Again, Nevada means casinos, Nevada means airline travel, and a lot of other things associated with the hospitality industry. And when we talk about unemployment numbers and we talk about unemployment being somewhere around 6%, the one part of the market that has not really recovered as much with the unemployment data has been service and hospitality and that end of the market. So again, I think in the next few months, we'll continue to see those numbers improve. We'll continue to see things getting much more back to a normal environment.
I concur because, especially with summertime coming, people want to get out. They don't want to be cooped up. There's also the corona is less effective in the summertime than is the rest of the year in the colder months. Between that and the vaccination, I think there's going to be an explosion of travel, people getting out there, people spending money, which is good for the economy.
You're correct. And one of the things that will be interesting, though, is the U.S. is very different than most other parts of the world. And the rate of vaccination and the rate of reopening the United States right now is far different than most other places in the world. So Europe in general is a lot slower. They've been having some issues with the AstraZeneca vaccines. While there's some recent issues that we've had with the J&J, the Moderna, and the Pfizer continue to move ahead with great speed. So while typically travel for Americans means leaving the country and going to exotic places, there's also a high likelihood that a lot of the travel this year will be much more domestically oriented. And again, I think that will also be very beneficial for U.S. economic growth and U.S. economic activity. So we still remain very optimistic about the world going forward. From our standpoint as an investment committee, we're mindful of things like, creeping inflation or, other elements like, possibly another round of COVID. But generally speaking, our thesis is backed by the concept of a very accommodative central bank, which we've seen time and time again, a government that's willing to backstop the parts of the market that are most impacted by any weakness, which we've seen. And again, a continued improvement in our battle against COVID, which, by all accounts, we continue to move ahead. So certainly expect that we might see some more volatility. But again, when you look at the volatility measure right now by the VIX, and you look at all other signs, things generally look pretty good, and we're continue to be encouraged by the opportunity that we see for capital markets going forward.
Michael Zaremski, head of U.S. Private Banking, Bank Leumi USA, member of the Investment Committee for Leumi Investment Services. Thank you for sharing some of your insight, and we look forward to having you back.
Thank you very much, Zev. Always a pleasure, and all the best.
And we're going to be right back. Don't go away. Stay tuned.